Hello, thank you. So 1 year ago was the first time I stood up and talked about the rock story on this stage. And at that point, I introduced my team. So we just built our new management team, but also our pathway to production. So far, Rox has ticked every single box on our pathway to production, and that's what we're all about. It's delivery. We're here to deliver value, deliver a project, and ultimately build a gold mine. So Rox's flagship project is the UME Gold Project. It's in central Western Australia, surrounded by multi-million ounce mine producers, and in itself it's a 3 million ounce asset between current resource base and historical production, 670,000 ounces at 5.4 grams a tonne. We've got an initial 7-year mine plan, averaging circa 120,000 ounces per annum. And the key word there is initial. The potential we have there is still huge. But for us, it's all about we've got enough to deliver a robust project and actually start building this asset. In November, we released the DFS. So year before, in July 24, the PFS came out. Robust project, good life, great costs, not too bad a capital. We've now come back, robust plan with the DFS, maintained a long mine life, low cost, and substantial returns we expect out of it. Circa $2,000 an ounce all-in sustaining cost. Free cash flow at today's spot price around that 3.7 billion and a 2.4 billion NPV8 for pre-tax numbers. Pre-production capital modest at around that 383 million, and that's for the full site build-out, plant and the underground assets. The production profile, again, it's about 120,000 ounce average, or during a steady state production, it gets up to around that 130 plus. So it is a substantial producer. 7-year mine life, circa 91% recoveries from our chosen processing technologies. And we're going to build a 1 million tonne plant. So we engaged Macquarie to quit Mintrex last week to be our EPC contractors for the build. So it'll be a fixed price job to get this thing built. But one of the ones here is it's 1 million tonnes, 900,000 tonne mine plan. We've been questioned on that why. Why build a bigger one? And from our perspective, we see a huge amount of growth potential. Drilling is started now to start converting some more of that material so we can actually up our production rates in the mine, plus the regional opportunities we see around us as well. And to really help de-risk it, mining's already underway, and we plan on having a circa 200,000 tonne stockpile and a bit over 3 grams a tonne sitting in front of this mill. So when we do start it, it has a high potential of actually succeeding. High-grade reserves, high-grade resource. We've got 2.2 million ounces at, sorry, could remember my numbers here, 5.6 grams a tonne in the ground. In the underground itself, it's 2.1 million ounces at 6. Our initial mine plan is 900,000 ounces and a reserve of 674,000 ounces. And we're well funded. So today, at the start of the quarter, Rox had $232 million in the bank. We've also got put options there for forward protections, so it's a downside protection in front of us. In November, December, we completed a $200 million placement, and that was our entire equity component that we've got planned for this build. So it's about 40% of the funding has already been done. We're working with the lenders at the moment, and that's an imminent process, so we're not too far off, and we are expecting to call an FID by the end of this quarter. We're a reserve base. It's based off having 3 declines. So we've got an existing decline in the centre of it, the UME main. That goes down nearly 600 metres below surface, and that was mined in the 90s. Off to the north, so to the left of the image, United North, we started this decline in November. We're about 650 metres into the mine now, and we should be cross-cutting the first level of the ore body before the end of the quarter. And then next quarter, we'll actually start the strike drives. So this is all about de-risking the startup and building our stockpiles. To the south, Pollard Prospect to the right. Whilst we dewater the pit, we should see the planned water locations here in the existing decline again by the end of this quarter, and then next quarter we'll start those declines, stripping the existing, which is fast and cheap, plus cutting that new decline with the intention of getting in there, getting the drill rigs in and growing the ore system. When we look at it, and again, it's our starting plan, we see a huge growth potential sitting here. In our recent drill program, we didn't drill any holes more than 500 metres below surface. Our deepest hole is 900 metres below surface. It was drilled back in the early 2000s, carrying significant grade and a strong intercept, and that's not even part of this mine plan. Right now, we've got a rig sitting on United North, doing some infill drilling and looking at some growth targets, because we do see a high potential to bring more tonnes off these early levels, because there's not a lot of drilling in there, but we've got enough to get it started. We're then going to move on to the UMA North area, start putting some holes in there from surface before we come and bring the rigs into the underground, start that infill, start that grade control drilling, and then later in the year we'll actually start looking at the growth targets. We've got a large inferred resource sitting there, so it's not going to take too many holes to be able to convert more of that to bring it into the mine plan. And one of the big ones here, top 300 metres of ore system, it's still over 4,000 ounces per vertical metre. It's a massive system, and this is over quite a short strike extent for the known mineralisation. Our processing infrastructure, so again, our plan is to build a 1 million tonne plant. This is a sulphide plant. 92% of our gold is associated with the sulphides. Of that, it's about a 10:1 ratio to pyrite and arsenopyrite. But a pyrite, fine grind, liberates the gold. We can get that quite easily. The arsenopyrite needs a little bit of oxidation. It's a semi-refractory nature, so we've just got to crack the surface to let that cyanide get in and do its job. What we're going to build, it's a pretty typical front end. Jaw crusher, 2-cone crushers into a ball mill for a 75 micron product. From here, again, being a sulphide plant, what we want to do is concentrate it. So we're going to float off the sulphides. In doing that, we get about 90% of the gold in that concentrate, but that's only in 10% of material. The flotation underflow goes straight to the leach circuit, and we recover most of that gold through conventional methods. But that concentrate now, it's circa 45-50 grams a tonne. That's what we'll go put through the Albion plant. The Albion plant is a 2-part process. First one, ultra-fine grind, where we're going to take it down to 12 microns. At this point, 70-75% of the gold is now recoverable because it's come out of the pyrite. That last bit is what we need the Albion tanks for. Albion, a lot of people still don't understand what it is, but at the end of the day, it's a really simple process. It's owned by Glencore Technologies, so I can see the guys back there. It's no different to a leach tank, different material, different sparge design. We add sulphur, which is our concentrate. We add limestone for the acid neutralisation, run a low pH, and a large amount of oxygen. It's all done at atmospheric conditions. Generates heat, self-starting, self-sustaining reaction. We crack the sulphides. It then goes into the standard leach circuit where the cyanide gets in, dissolves the gold. We take it through the elution circuit and we pour the gold bars on site. And again, 91% is the recoveries we're expecting out of this. It's been an intensive test work program which has taken about a year to complete. We've generated concentrates which match different periods of the mine life. Done the testing, done repeated testing, done variability testing to confirm this circuit is going to work. And really one of the things we see with development of it is it's going to change the industry, not just in Western Australia but globally, to actually bring this technology to the forefront, bring it into the gold, particularly in the Western mining world, and then open up a lot of opportunities, particularly for rocks. Last year, our pathway to production, one of the key parts in that slide, was actually the bottom row, was the early works process. It was about getting into the mine early, get that start up, get into a drill platform, start delivering ore to the ROM pad ahead of requirements. And that's what we've done. So dewatering of the main pit, we're about 75-80% of the way through that now. By the end of March, we should be down to the bottom of the existing decline which sits in there and to our pollard portal positions. And then early next quarter, we'll start those 2 declines. Our camp, we had 51 rooms previously. We've added another 60 brand new high-end rooms into the camp. And I've got another 240 being installed at the moment. So part of that early works was locking in the delivery of all this infrastructure because it takes a long time. It's at least 6 months right now to build a building for a mine site. With the mining, Burncut Australia, they're out there, they're fully mobilised. They've been there since November, performing an absolutely fantastic job. We're doing at least 2 cuts a day in a decline at the moment, the occasional 3 cuts a day going in front of us. Ground conditions are excellent, it's dry, it's good, and they're getting good productivity. And the intention is next quarter we'll have an underground drill rig and start that infill process and followed by the growth process. Clearing permits, we got those mid last year. Underground mining permits were obtained in October. We've lodged all the required permitting for our processing plant and we expect to see the first part of it come through next month and then the rest of it in this half. We've got new officers out there, mentioned our EPC contractor, and long lead items for the plant. They're already ordered. The ISO mill was ordered last year, we ordered a ball mill this week, and the rest of it's all about to start coming through. And then there's the exploration potential. So again, we're looking at a really small window at UME, circa 3 kilometres of strike. I'd have our 62 kilometre package. UME is a splay off the main shear zone, which is a feeder system. Not much work has happened in there. One of the things in a Murchison, if there's not an old mine there, chances are there's not a hole which goes more than 40 metres below surface. So the potential for us is still quite large. We did an aeromag survey last year, which is on the next slide, which I'll show in a minute, looking for new structures. Where can we see as the likely places we can find gold? We've got a few identified already, and really the plan is over the next quarter, the next half, starting to our Greenfields project. We've got a healthy budget sitting there. The intention is for at least 1, if not 2 rigs on surface at all times, and looking at 2 to 3 rigs underground as well for the next 2 years. With the aeromag, it's quite a high density data set. We've flown our entire package, plus a few areas outside of it, and our initial targets, infill drilling from the surface. Then we've got the Coonamarra Commonwealth area. So that's a long strike, a bit of an offset from UME main itself. And then we've got the Hove prospect, which sits on the main shear zone, and we've had some interesting feedback from prospectors out there. So again, these are the early parts. We've now got an external consultant looking at it to help us with the target generation. And this goes back to our pathway to production. So again, last year, we stipulated target for the DFS was in November. We hit that. FID targeting this quarter, we're likely to hit that, with the plan being to pour our first gold bar in the middle of 2027. So we're only looking at about 16 months away now, which is close. We still believe we're going to hit it. To make this happen though, it's all about building the right team. For myself, I've got a background in developing mine sites, helping businesses restructure and grow. We're an experienced team and we've all got proven backgrounds in starting up operations. Throughout our board, we're quite strong on that front, particularly with Nathan Stoitis on the plant side of it. So again, the Met's been a big focus here. He's on here because he believes he can build it and he's going to help us get through all of that as well. Through my management teams, we've got a very strong team of people here, good connections, and we're leveraging that quite strongly to help build the rest of our operating teams as well. And for our next steps, so big ones for us, keep going with the early works, finish off the camp expansions, unite and off decline, get that down to the first drill platforms, take that first rig underground, start drilling, start delivering ore up to the ROM pad, complete the dewatering of the main pit, and then start dewatering the underground workings. And then surface drilling, it's already underway. Regulatory approvals, as mentioned before, we've got 2 outstanding permits to come in, the MDCP, so basically want to start construction. We expect that to come through in the next month. And then the works approval, which is our operating licence, we expect to see that this half. Keep going with the plant design. So we engaged Macca back in December for the front-end engineering design. That's strong, well advanced now, finalising the last bits of the contracts at the moment, to then start building this thing once we get that closure proposal, MDCP, and call that FID position. And then the FID, we're waiting on that approval and binding term sheets from the bank. So, and again, these are imminent things, very near-term catalysts for the company. Corporately, we've been following the gold price pretty much for the last few months. Last week we took a bit of a hit, but we're still sitting at circa 50 cents, about a 700 million market cap company. And again, $232 million in the bank. Our big shareholders are some pretty high conviction guys in the industry, L1 Capital, Q Gold and Hawke's Point. So to summarise it, the investment highlights, high grade resource base, high grade reserve 674,000 ounces at 4.8, a mine plan 900,000 ounces at 4.9, and a resource of 2.2 million ounces at 5.6. So again, strong potential for growth coming through here. We're still open down dip and a long strike, and we plan on drilling this out along with the rest of the tenement package. These will lead into increased mining rates, fill up that plant, plus a longer mine life. The DFS, the cash flows are huge. The real summary to take out of this, a circa 120,000 ounce per annum producer, a $5,000 an ounce margin, 600 million a year in average cash flows for the life of the project. We replace our market cap every year in cash flows. And the re-rate potential, with all this work coming up, we'll keep the communications flowing. We'll be fully funded hopefully this quarter, start construction, start of next quarter. Any more questions, come see us over at booth 40, and thanks for your time.